What's up, everyone? This is Marcus. So normally I have a tax tip or tax advice, but today is a much longer video and basically a call to action. So today I want to talk about where taxes are headed and how will it affect or impact American savers. Really, it's a question that everyone with a retirement account should ask. And if we only had a crystal ball onto what tax rates will be in the future. But really, the truth is that we don't even need a crystal ball to help understand the risk of rising taxes. Now, predicting the future or future tax rates, it is a challenging task. It's especially true for those of you who have saved all or the majority of your retirement funds in tax deferred vehicles, IRAs, 401ks, things of that nature, because you basically agreed to pay taxes on your retirement funds in the future. And so any changes to tax levels can impact the amount of retirement income you get to keep versus the amount that's going to be sent to the IRS in the form of taxes. And because all of us want to live long lives in retirement, you have to plan for future tax changes, not just over the next few years, but over the next 10, 20, sometimes even 30 years in retirement. The biggest risk, you've heard me talk about this a lot, the biggest risk to those who have saved in IRAs and 401ks is the risk that taxes will be higher in the future than what you planned for. And this could leave you with less spendable funds in retirement and basically upend your income plans. So, what are the chances of taxes going up in retirement? Is it even worth the time to prepare against the risk? Now, if you listen to me, read one of my books, my answer is a resounding yes. And here's why. So many experts, myself included, I believe that taxes on savers is going to rise in the years and, of course, decades to come. And so because of my background as a tax enrolled agent, I follow our government agencies pretty closely, especially as they put out data relevant to taxes. And so this year, the Congressional Budget Office, the CBO, they put out their annual report on federal revenue and spending for fiscal year 2022. And so when you crunch the numbers and the data from the reports, the case for really higher taxes, it becomes pretty clear. In fiscal year 2022, the government took in $4.9 trillion of revenue, right? And of course, the largest source of revenue was, of course, individual income taxes, which generated about $2.6 trillion. Now, $4.9 trillion sounds like a lot of money until you evaluate government outlays and their expenditures. Now, let's look at mandatory spending, which is spending the government is required to distribute by current law. Mandatory spending is primarily made up of government benefits, things like Social Security and Medicare. Now, Congress doesn't really have control over these expenses. They are simply our government's obligation, like I said, under current law. So in that same time frame, fiscal year 2022, our government spent $4.1 trillion on mandatory spending. Now, that's not quite a complete number because the other piece of federal spending that Congress can control is the money that America spends servicing our debt. And because interest rates are high right now, the government is paying its debt at a higher rate. So that amount was $500 billion. That's what we got to pay each year on the interest alone. So when you add those numbers together, non-discretionary spending was about $4.6 trillion. So our government took in 4.9 and spent 4.6 on non-discretionary spending. But that takes up mostly all of our government's revenue. But that's just non-discretionary spending. Let's talk discretionary spending. So discretionary spending is the spending that Congress allocates to government agencies and programs. It's basically the way that we fund things like our military, our Department of Education, things like that. So in that same fiscal year 2022, our government spent $1.7 trillion on discretionary spending. So the total government revenue in fiscal year 2022 was $4.9 trillion, but total government spending during that time was $6.3 trillion. See the problem? There is a $1.4 trillion gap between the revenue our government brings in and the revenue it sends out. So our government has a $1.44 trillion problem, and it really only has three ways to fix it. First off, the government could reduce mandatory spending. This would be hard to do, really just based on demographics alone. Here in America, we have an aging problem. The growth in Americans age 65 and over, it rose between the last two censuses at the largest rate since 1890. So a full $2 trillion of mandatory spending, $2 trillion of that mandatory spending is used just for Social Security and Medicare alone. So with more seniors requiring more benefits, government's probably not going to rein that in. Now, second, the government could reduce discretionary spending, right? After all, Congress is always debating legislation, right? But it is expensive to act, right? And in the past few years, you've seen Congress debate trillions of dollars of new spending, and they don't ever discuss reducing spending, which, of course, brings us to the third option, and that is raise more revenue. How do they do that? Taxes. And this is why I believe that we are entering a rising tax environment for Americans. The current federal debt has now climbed beyond $33 trillion. And we cannot sustain debt accumulation at that same rate or at this level. So the government is going to have to find ways to increase tax revenue to support its spending levels. And so what am I getting to? If you have primarily focused on income planning for retirement, you've really only done half the work. It's time to complete your retirement approach with tax planning also. After all, income planning is about how much money you're going to have in retirement. Tax planning is about how much of that income you actually get to keep and spend. Heading into 2024, tax diversification, I talk about this a lot, should be a critical piece of your retirement approach. It's important for savers to have funds not only in their tax-deferred accounts, but also in your tax-free accounts, Roths, life insurance retirement plans, and other tax-free vehicles. And so one of the things that sets my firm apart from most advisors out there, advisory firms out there, is that in addition to the fiduciary approach that we take to investment management, we are also tax experts. We identify tax risk, we quantify those tax risks, and we address tax risk for our clients. So if you're watching this and you're not one of our clients, I would highly recommend you click the link below, schedule a 15-minute phone call to discuss taxes in retirement. I say this all the time, you owe it to yourself and your family because you don't have a full retirement plan or even a financial plan unless you have a strategy for taxes. Until next time.